we have three ways of improving E. One is to improve the probability of good state, okay? So suppose that you're selling ice cream, and suppose that you have a way to affect the weather. You just try to get more sunny days. Now, if you can do that, then you improve P, okay? And also, you can improve G, that is the return that you can get when you have a sunny day. Now, how can you do that? Well, try to put up a big sign in front of your shop, your store, or whatever, saying that, well, we have very nice, delicious ice cream, something like that. Okay. So in order to attract more customers. Now, if you can get more customers, then you can get more business, then your return during good stay would be improved. Okay. And maybe the third way is to reduce the value of B. Okay. Now, B is the return, which is negative when you have a bad day. Now, as long as you are able to make your loss during a bad day smaller, then you're improving E. Okay, so that is three ways of doing that. Now, in terms of the initiative, what can we do? Okay. Okay, now, in increasing P, the probability of having good state, well, to do that, well, we can do, the Chinese government in particular can get more information, then try to know more about the chance of getting the contract signed, the chance of completing the initiative, the project, and so on. So that is the way to improve P. Okay. Another way is to improve G. That means, well, you try to raise the cost of the contract. So now Thailand is negotiating with China about the price of building a high-speed railway between Laos and also Bangkok. Okay, and now the Thai government is saying that, well, yeah, it's too expensive, and now I try to build only part of that. Okay, whatever. So basically, if China wants to be sure that, well, it is not going to lose money, then at least, to raise the price of the contract of the project would be one way. Okay. Another way is B, to reduce the B. Okay. Now, here, when China signed a contract with the local government about building a high-speed railway, that does not mean that everything would be fine even after you have signed the contract. Okay. Now here I give you two examples. Okay, two cases to illustrate the risk of that kind of project. One is Mexico. Okay, and Mexico actually is trying to build a high-speed railway, and it invited several countries to submit bids for that high-speed railway. Okay, the high-speed railway is not too long, basically, and therefore China submitted a bid by the China Railway Construction Corporation. Okay, and then China won the bid. Okay, so that seems to be good news. But unfortunately, that is not the end of the story, because about a month later, the Mexican government said that, now I'm going to postpone it. At least, there seems to be some problem, and then, try to submit another bid. Okay, now, you have already spent so much money on studying the project, and now you submit the project and you won the contract, and but eventually that seems to be a bubble. Okay, and therefore the China submitted the second bid. Okay, and then it won the second bid again. Okay, so that is good news. But then about several weeks, okay, 2 weeks, I think, the Mexican government said that, okay, I'm going to postpone this project indefinitely. Okay, and the Mexican government seems to be feeling bad about that, and okay, so the government tried to calm down the Chinese company, and then pay a compensation, okay, a penalty, okay. So usually, if you breach the contract, then you have to pay penalty. But what is the penalty? Okay, the penalty is only what 1.3 million US dollar. That is a small sum of money. Okay, I really have that amount of money. Okay, but for a government, this is a very small amount of money, and also this is small as compared with what the China company has spent on studying the project and writing up the proposal and so on. Okay, so in that case, this project means a loss for China. Okay, now if you are going to do this again, probably you would write down in the contract more clearly about what kind of penalty that the local government would have to pay. Okay, something like that. Now this is case one. Case two, Sri Lanka. Okay, so I mentioned about this earlier. So Sri Lanka, okay, in the previous government, okay, signed a contract with China to build a Colombo Port City project. Okay, now Colombo is the capital of Sri Lanka. So basically, just outside the city limit, basically China is going to renovate an existing project and make it bigger, make it more modern, and also try to get some new land from the project. Okay, and according to the contract, that new piece of land, or at least part of that new piece of land, will belong to China indefinitely. Okay, so that becomes part of China's land. Okay, and then in July last year, they had a new government. And the new government said that, well, that is not possible and whatever. Okay, so in that case, the new government asked the Chinese government to stop the project. Okay, the project has already started. So they are building the port already. But now they have to, China has stopped that project. Okay, and that was January 2015. Okay. And then this year, okay, maybe after 1 year's time, this new government and discovered that well, having this kind of project is good for the economy and the country, and therefore the new government asked China to continue the project. Okay, but because the project has been stopped for a certain period of time, and the company is losing money because you have already shipped machines, hire workers, and so on to build the project, but now you are not able to do that. Okay, so the Chinese company is losing money, and just a few 2 weeks ago, the Prime Minister of Sri Lanka came to China and tried to ask the forgiveness from China, and also try to attract investment from China to Sri Lanka, and also mentioned that well, that port city project should be continued, and they have confidence that well, Colombo would become another Shenzhen. Okay, and but there's one problem here. The company, okay, I think it's the China Railway Construction Corporation, has lost money because of the stalling of the project. Okay, and actually that company is asking for something like say 1.5 billion US dollar. Okay, but the Sri Lankan Prime Minister didn't mention anything about this compensation. Okay, now if eventually Sri Lanka is not going to give any compensation, that means that the Chinese company is losing money. Okay, so that means that well, you can see the riskiness of this kind of investment. Okay, and the loss can be quite substantial. Okay. Okay, now this is well, this is all I want to say? Okay. Thank you, thank you. Well, if you have any questions, I'm happy to answer. Okay. I'll try my best. Oh, okay.
Thank you, Professor Wong. You have provided a very interesting research project, and I have read some slide that you have given is the multiplier effect. In fact, actually, I think it's a plan that given by China to attract different countries to enroll in the project, right?
Yeah.
And to set up some well-beings after you take part in the project, you will have benefits. And the multiplier effect you mentioned, there's a lot of things that will provide multiple effect. Like you have mentioned technology, labor, and capitals, the inflows, okay. And I believe that if we focus on the multiplier effect, different countries may have different, have emphasis on different kinds of capitals or different kinds of the labors or something, technology. Different countries have different requirements or different needs to input. So if we focus on this part, I'm interested whether you have done research on the multiplier effect so that on the cost side, on the cost of investment, we can have a minimum optimizations of the cost so that on the cost side, you have minimum research so that we can minimize the cost so that we can satisfy the requirements and attract the countries that go into the projects. And so on the other hand, you focus on the returns. The return side, you have mentioned the good days and bad days, and you provide some suggestions. And is it possible to develop further, to detail, so that how the good days come from, how the good earning of the good days, so that they can have any calculations to extend this research, and so that we can have the maximize and on the left-hand side. So I think the project will be more complete and more interesting. I'm not sure whether our understanding is correct or not. So I just provide some questions, and so that's the questions. Thank you.
Should I answer now or what? Oh, okay. Yeah. Well, thanks for your comments. Actually, the multiplier effect is the ordinary multiplier effect in macroeconomics. So basically, you can something like say the government spends $1, and you have a multiplier of 5, for example. Then altogether you get $5 additional in the economy. So this is the ordinary multiplier effect. Right. Right. Now the multiplier may be different in different countries, okay? That depends on the saving rate, okay? And also, if you look at, say, additional effects on the local economy, other than the high-speed railway, actually, we have to look at different countries individually, because the Chinese government is signing individual contracts with different countries. And the contracts, in general, are not the same. Okay, now I can give you an example. One contract would state that, well, when China is going to provide the technology and the fund and so on to build the high-speed railway, and they actually mentioned the stops, okay, in different cities, okay, inside the economies. And also, the contract specifies what China can do in addition to the station. Okay, one contract would mention that China has the right of developing the land along both sides of the train line, especially close to the station. That means, well, China is trying to get some additional benefits from the project. Okay. Now that is something this paper cannot analyze too much, because it varies from one country to another, and also the story is still being unfolded gradually. Okay, so we are not at the end of the project. We are not at the end of this of the initiative. So there are so many things that I do not know, and also so many things that no one knows actually, because this is still up to the negotiation between the Chinese government and also some of these governments. Okay, but I think it's a good research topic, because there are so many things that we do not know, but there are so many things that are so interesting and important, and therefore it is actually interesting to do some estimation. But that is beyond what this paper can do.
Thank you, Professor Wong. Is there the lady at the back?
So thank you for giving this talk, which is pretty comprehensive. And I just want to know, just now you mentioned that there may be some opportunities like the high-speed railway, trade, or setting up business, etc. So I want to know, in your opinion, in what ways do you think that the small companies in Hong Kong, especially the small ones, can benefit from this One Belt One Road initiative?
Okay, actually, one point I mentioned, emphasized in the paper is that you have to do some investigation, because you have to know what kind of goods and services would be needed for the initiative, and so on. And also, you know quite well about your what your company can offer, but you have to try to see whether what you can offer and what the local economies would need can match. Okay? And this is something that you have to explore. And if I were a manager of some large companies in Hong Kong, other than providing the financial services to these countries, something that people have been emphasizing, but I think that we can do something more than that. So if for a large company in Hong Kong, I would suggest that the first thing they would have to do is to know more about these countries. Okay? And maybe one thing they can do is to set up a local branch over there, maybe a small office. It does not have to be very big, because now you don't know what you can do. But maybe a small office over there to have a better understanding of the economies, okay? And then whenever opportunities arise, you may be the first one to know, okay? And probably you would be the first one to get the benefits, okay? Now, I'll give you an example. Suppose that in order to build the high-speed railway, the China Railway Construction Corporation would need more screws, for example, to tighten the bridge or whatever. And if you have an office there, maybe you would be the first one to know such a need, and then maybe you would be the first one to arrange for these screws. Okay? So something you have to be there in order to know more about what you would be needed. And also I mentioned earlier that China actually, in signing some of the contracts, China mentioned that, well, it has the right of developing the land along the high-speed railway line. Okay. Now, if that is the case, then you know that, well, probably China is going to build houses and so on. Then you know that, well, that station is going to attract a lot of local residents. Okay. Basically, business would grow substantially, and in that area, then maybe you'll be the first one to do that. Okay? Build offices, buildings, apartments, and so on. Okay? So that is, well, I'm not too experienced in doing business, so that is the only thing I can think of. But the principle is that you have to be there.
Thank you.
Yeah.
As time is running short, we can have one more question. Yeah, the man at the back.
So first, thank you for giving an inspiring talk, and I'm curious about do you think the management risk is high in Hong Kong under this new initiative?
Well, high is a relative term, so I don't know what that means. But actually, you can do an assessment of the risk, the possible returns, and so on, before you decide whether you want to invest there. Now, there are some types of business that would have much lower risks. For example, trading. Okay. Now, in one of the diagrams, I show that, well, in the third stage, you have trading. Now, suppose that you have trading of these economies, then the risk would be smaller. Investment would have much higher risks. Okay, so I think that's up to the companies to decide whether the risk is high or low or not that high. But before you know that, you have to get more information. The problem is that, well, right now, it seems that no one, even the Chinese government, does not have a very clear and good picture of the initiative. Okay. Now, one reason I can mention is that, well, yesterday I had a chance to meet with some business in China. And actually, according to him, he said that, well, the Chinese government is not giving out too much information about what the initiative is. Okay. Well, that in some sense, probably that is not too good for the companies when they are thinking of investing in some of these countries. But one thing we can understand is that, well, the initiative is still new. New in the sense that, well, it's not too much time after it was first proposed. And also, it is new because nothing like that has happened in the past or in some other countries. No one knows exactly what they can expect. And something has to be developed. Okay? And, but as I said, if companies are thinking of, taking advantage of the opportunities, what they should do is to try to get more information about this in order to be the first one to invest there.
Okay, thank you very much.
Thank you very much, Professor Wong. Please be seated. Please give a big applause to Professor Wong.
Thank you, thank you.
Thank you for joining today. This is the end of the public lecture. I hope you found today's lecture informative and useful. So I would like to request for your assistant to complete the evaluation form in your folder. We would love to hear any feedback or suggestions that you may have for us. Thank you very much